Good afternoon, I'm Carol Harmer from the International Trading Institute. I'm looking today to show you some patterns that I found. The one that I'm looking at more intensely is oil, and the reason that I'm looking at oil is because it looks like it's made a double base. Let me just go over and show you. You can see the price here, and my systems have gone down, but I'm doing my best with this one. Right, you can see with the price based here, okay, in April, and we had a low of 55.12. If we go over to here, you see we have the low of 55.30. Now with these patterns, and really pattern recognition is probably one of the most important things that you will learn as a trader, because you can preempt these patterns if you can find if you can gauge what the pattern is, and there are loads of them, and obviously this is something that we're going to go into in great detail on our course starting in September. But if you can recognize the patterns, you know roughly what the market is going to do. So it's not like you're psychic, it's just that you're understanding and observing that markets make patterns. And I always say history repeats itself. So through the years that I've been doing it, I've kept to the pattern strategy, if you like, and I found it very profitable and very easy to follow once you understand what the pattern is. So if you look at oil, to make a double base, it has to go to a low, then it goes to a high, and it goes to another low. Now we can extend below the previous lows, but you have to understand that again, you've got the algos going in your not so great favour, but you have got the algos going. You can see where it was captured by the 21-day moving average, just around here. So to make a double bottom, you need a W. So traders will be buying towards this area, okay? Even though this was looking like a continuation pattern of the big drop down. So you retrace. If we put a Fibonacci level on there, which is something else that I'm very, very anal about, is Fibonacci levels. So you can put, when the legs started to go down, you go down to here, click it. Did it get to the 61.8? No, it didn't. You can also go a bit further out if you want to, and watch them tie in. I like to do this, but then I like to put in a lot of work in the markets that I look at. So we look, could we tie in with anything? And if you look along, you can see here, we tied in exactly with the 38.2 of the whole move lower. So you define your chart pattern, and then you add the indicators to it, and that gives you much more confidence that the market will react the way that it will react. So short term, the market went lower, and it would do by bouncing down from that 38.2 fib. Why we would have seen buyers coming in at this area is because traders, we get to know the patterns and we preempt the pattern. You know, it doesn't always work, but you know very, very quickly, because if it goes much below the low that we posted here, which is 55.12, so say we went down to, I don't know, 57, it wouldn't be the algos doing that, it would be, or it was going lower again. But you always go with it on the second break. Never on the first, because that stops an algo's being taken out. If the market is to continue lower, it will go back, and then on the second break, that's when you sell it. But you don't want to be selling it, until it's broken, because you can get caught like that. Many traders ask me, oh, how do you know it's going to break? How do you go from I wanting to buy it to I need to sell it? I need to get out of my long positions and I need to sell it. And this is where technical analysis and charting come in extremely handy, because once you learn what to look for, you can preempt it, and it's okay to be a buyer above X. But if X breaks and stays broken, you don't want to be long anymore. And I think that is one of the biggest faults that I can find with traders at the moment, because they say, yeah, but if I wanted to be long at X, why would I not want to be long when it's going lower? The reason you've bought it is because there is a chart formation. There are technical indicators that are showing you should buy it. If that breaks, the reason for going into the trade, any trade, goes out of the window. So you need to understand that. And it's very confusing, I think, for new traders who sit there and go, I don't understand this. Why would I want to be short of something that I was long of? And I call it like a stop reverse order, okay? And they are quite frequent, these stop reverse orders, because we all know about them now, and we use them. And maybe sometimes you get an ego where, well, I've been long, I want to stay long, and I'll see what happens, and I'll scale down buying. And then what happens is hope. Hope then springs into the market, and you can't trade on hope, So when we start this course, we will take you through all these little nuances that professional traders understand and know, and that we can pass this information on to you. And obviously we want to pass this information on to you because we want to help you become a profitable trader. That's the reason that we're doing it. I haven't got my system back up and running yet. I don't understand. When Spain had its power cut 2 weeks ago, or last week, it's been a bit strange trying to get everything back to where it was before. So I hope that you've understood what I've been saying, and I hope that you have a look at oil, and even if you don't trade it, just look for patterns. And these patterns evolve often, like really a lot. There's loads of patterns, and they are your first key to where the market is going to go next. Okay, we're going to load this up onto YouTube. Please go to the International Trading Institute YouTube website and tick like, subscribe, and you will get these videos as often as I do them before we start going live. Anyway, have a great afternoon, and I'll catch you all tomorrow. Bye.